It's time for BNSN Pathshala, and this is something that we do every Friday to help you better understand aspects of mostly technicals is what we speak about. So let me hand it over to Kunal Bothra, who's joining in. Kunal, we're talking about the Fibonacci sequence and we're talking about Fibonacci retracement, and I don't know how many people know that this is actually a concept that originated in India, the Fibonacci sequence. It is something that can be traced back to as early as 200 BC, and Indian mathematicians originally made it. What can you tell us today related to the market though?
Well, absolutely, Alex. It's a very, very interesting topic. Fibonacci, retracements and the ratios, and it's also one of my favorites. Especially when I started learning and practicing technical analysis to the core. Now, briefly, I'll just explain what is the Fibonacci series and sequence all about. So what I've mapped up is the Fibonacci series of numbers. So we say that the number ratios starts off from a series of 0 and 1. So what you typically do is you take the first two numbers, you add up the first two numbers and you get the second number. So for example, you start off with 0 and 1, you add up 0 and 1, you get the next number which is 1, then you add up the previous two numbers which is 1 plus 1, 2. Then you keep on doing this mathematical sequence of adding the previous two numbers to get the third number. And that's what we call it as a Fibonacci number sequence. Now, why is this number sequence very important? Because if you look at the lower part over here, the ratio part, so from a number sequence, we get into the ratios. Now, as and how you keep on moving ahead in the number sequence, the ratios of the two numbers, for example, in this case, 21 divided by 13 is 0.619. You move ahead to 34 divided by 21, it's 0.618. So the farther you go, the ratio remains absolutely the same, 0.618. This is what we call as the golden ratio of Fibonacci sequence. Now, this is a ratio which is widespread and it's been seen across nature. So many of the different asset classes and things in nature are built on this golden ratio. So this becomes a very important aspect to look out for. The four ratios which we typically look out for, which we derive from these golden ratios and which is used as a practicing technical, for a technical study, are the four retracements, which is 23.6, 38.2, 50% and 61.8% retracement. So these are four very important retracements. They help us gauge where the financial markets or the asset class or the stock or the index heads towards. So I have mapped up three examples of trying to analyze big trends using these financial or Fibonacci ratios. Now this is the chart for the Nifty 50. What I've looked up is the start of 2009. Now we all know that the markets bottomed out big time in 2009 March. So from those lows of 2009, I just drew a very simple Fibonacci retracement ratio, mapping up towards 2019 high, and look at the coincidence part. The ratio or the sell-off which had actually happened on the COVID time, it got negated exactly at this point, which is the 50% retracement. So 50% retracement on the Fibonacci ratio is where you saw the downward trend getting capped and you saw the entire bull market retracement getting completed and your new bull market shaped up. We will now look at this in terms of individual stocks to help us gauge where the next set of trend lies, whether the stock is into a retracement mode or whether the stock gets into a strong rally mode. So the next stock which we will be discussing is on M&M. As you can see, a very similar kind of a chart, a stock which has been in the thick of limelight. Look at the last, 1.5 years of chart patterns. M&M, which was at almost 250, 300 levels, managed to rise up towards 900, spend some time over here. And look at the retracement part. The retracement ended exactly at this point where the stock coincided with the 50% retracement. So that's where the retracement ended and a new correction started. So these retracement points become very important contra zones where traders can look at building up long positions or creating fresh buy kind of zones. And the last stock which I'll be discussing is on L&T, where it's more of a contra, where in a downward trend you find out points where the stock takes resistances. So this is the zone for L&T, the stock which topped out at I think 2000 plus levels. Saw the stock getting into a correction. Look at the bounce. The bounce exactly ended at this 61.8% retracement mark, which is again a fact that indicates that the importance of Fibonacci ratios and golden ratios. So this is a very important study. It's a deep study, very difficult to try and compress this into just a couple of minutes. But then this is how we tend to analyze charts and look at forecasting stock price trends over the near to medium term.